Hello, everybody, and welcome back to the Traders Mind Chat live show. Today, we've got some very interesting topic for us today. Today, we're going to be talking about how to trade part-time with a 9 to 5. Now, a lot of you know me, and you know that I was trading part-time for many years, about 20 years before I finally transitioned and left the day job behind. And I've been doing that now for about 3 years, a little over 3 years. So I want to share with you the journey. I want to share with you how things started, some of the pitfalls, some of the things that did not work, some of the things to avoid. Then what did work and worked out quite well, very nicely. How things have evolved, current trading results. What my prep looks like, all of it. And this is meant to be a discussion. So as you guys have questions, put them into the chat. Let me know what you're thinking, what you're feeling, where you're from. Put all that into the chat. In fact, why don't you do that right now? Let me know where you are watching this. If you're on YouTube, Facebook, Twitter, ShareVision, wherever you're at, let me know. And let me know where you're from. Put all that into the chat, and in doing that, that helps boost the algorithm, to helps push this out to as many people as can. So I appreciate you doing that, and yeah, of course, drop a like and share this out with people. So let's get into it. How to trade part-time with a 9 to 5, and how I started trading part-time and what did not work. So let me share my screen over here. Let me see. This is screen number 3. So, well, how I started was looking at stuff like this, right? Like going to MSNBC, going to Yahoo Finance, trying to read the news and see, well, what are the latest headlines doing, not both in the market as well as what are the headlines that are my stocks are making, what's in the news, trying to learn as much as I could about the company, 10Ks, all that kind of stuff. It was actually something that I had learned and started to read about, both in some finance classes, as well as funny enough, watching Jim Cramer. Any of you guys here know Cramer or watch that show? Put that into the chat. Let me know what you think about that. But that's how I started out, and so I thought that you should try to gather as much information as you can and try to educate yourself as much about the company as you can. And I started to hear that, you know what, you should really stick with a company until the story changes, right? You ever hear that, if you that you should stick with a company until the story changes? um Kind of thinking about the source right now, makes me wonder about it. But that was the belief, right? So great. Let me go tune into MSNBC and Fox Business and Yahoo Finance, and watch all those kind of shows and just be dialed in so much to this kind of stuff, waiting for some kind of news event. Um, Part of the problem with that, particularly as a part-timer, is that you are constantly dialed in and there's a lot of fear, right? Oh, I might miss something, right? So the constantly being tuned in, constantly didn't have uh, the smartphone back then 20 years ago, but like constantly like trying to like go check the internet, check whatever I could to try to get more and more and more information. And what ended up happening was that I would often find out that the quote unquote story had changed long after the price had already fallen, right? And that happened again and again and again. Any of you experienced that? Have you had a similar experience? Again, let me know. Type into the chat. Let me know that the chat is working. I know that the chat works well over on YouTube. So if you're tuned in and watching this on YouTube, type into the chat. I believe it works over on Facebook. Not sure if it works too well on Twitter or ShareVision. But go ahead, type into the chat. Let me know what you think about some of these part-time trading tactics and being dialed into the news, and if that's something that you've observed. That if you are watching the story and just reacting to the story, you tend to be late. That for me personally, that's something that did not work, and I tried to make that work for probably about 5 or 6 years, yeah, so it wasn't for lack of trying. Um, what eventually did work, right? So let's talk a little bit about what did work as a part-timer and why. What eventually worked was that still using some of the fundamental characteristics, but using it more as a screening tool, right? So there's about 10,000 stocks in the market. How the hell do we know which one to pick, right? Um, Part of yeah, and Tony just said, here's a great comment. Thanks, Tony. I block news except for Investors Business Daily, and that yeah, that's kind of where I was going too. So later on, I discovered how to make money in stocks. It's on the one of the books back there on the bookshelf. Uh, Made a lot of sense, and the way that O'Neill was using fundamentals too was to basically use it as a screening criteria, so only trading stocks that pass X, Y, and Z fundamental criteria, and then from there trading based off of the price action or the technicals, that kind of stuff. Um, so that's part of what started to work for me, and here's why. It cuts out so much of the noise. You're not reliant on the news or anything else. You could go and look up that data whenever you want. You could do the screening when it's convenient for you. So if it's convenient, before the market opens, after the market closes, sometime in the middle of the day, only on the weekends, you can screen for this stuff whenever you want. In fact, I still use this other tool here, MarketSmith, to do a lot of my screening. In fact, I'll show you some of the screens that I run over here. Right. So this might look a little bit complex, if especially if you are not familiar with it. But I run a handful of these screens, and just I'll run one or two of them just so that way you could see like well what passes. Right. So I just clicked on this one here, sector leaders, and you can see like four stocks past that. Right. Like so, it doesn't take you very long to flip through some of the names and see, okay, well, what types of um, fundamental criteria, right? Like here's all the fundamental criteria. How does a chart look? It doesn't take you that long at all to do that. So I'll run these kind of screens and I'll build watch lists. So that way, and I'll do that on a weekend, right? Or I'll do that after the close on a Friday. To be honest with you, you could really do this part, no, whenever it's convenient for you. Just build up a watch list. I like to call it a universe list because it's just the stocks that are in the universe that I'm interested in. So I'll go through this universe list that I just pulled it up. Right now, there are 394 stocks on that universe. Sometimes stocks will come on, sometimes stocks will go off. It's kind of like think of it like a comet, right? Like sometimes there's a comet that'll just come into our our galaxy, right? And then it flies out. Same thing with the stocks. Sometimes you'll have stocks that are there for a very long period of time, right? Like Apple has been on here for a very long time, right? Like Tesla has been there for a very long time, and a number of others too. But sometimes they come, they stay, they hang out for a bit, and it's just from this universe what you're doing. Then and this is what works so well for me too. Build a universe so that way you can start to become very familiar with a certain group of stocks, and everything that you're looking at, it fits this fundamental criteria that you're interested in. For me, I started with Can Slim. I started with How to Make Money in Stocks by William O'Neill. And just like most people that have had real success with that kind of system over time, you learn the basics from the book and from the paper, but eventually you start to make it your own. And you start to see different nuances and test different things and read other people too. And that's how you start to gain some real consistency. Um, so let's see. Well, what else? So in trading part-time too, right? Uh, so I would do this screening. I would do it on the weekend, and I would have my 9 to 5 job. Back then, I worked in healthcare. I worked in healthcare for about 20 years, and uh, I worked different jobs while I was in healthcare too. Some of the jobs I had some downtime in the middle of the day. Sometimes there was some positions that I held that were like 8 a.m. to 4 p.m. or 9 p.m. to 5 p.m. or more loosely like 9 p.m. to 6 or 7, right? Well, we've had those kind of jobs, and there were other ones where I was working nights or super early in the morning too. Um, Part of what trading in this way allowed me to do was to adjust my routine as well as a little bit of my style to my lifestyle, right? And I think that that's one of the big keys for that's kind of universal. One of the universal things that leads towards trading success is having these three things in alignment. If one of them is missing, you're kind of you're going to have trouble. So you need to trade in line with number one, your beliefs, number two, your goals, and number three, your ability to execute. Listening to the news and needing to be dialed in all the time, that was something that didn't work for me. Having something where uh, I was able to screen based off of certain criteria, look at charts, and then, right, like, so you have all these charts, right? Put Market Smith back up for a second. So you have all these charts, and you might say, yeah, well, like you have all this price action. Like, how do you know when to buy, when to sell? What you're able to do is set buy stop orders, meaning that if price crosses above X, then that'll trigger an order. And if price falls below Y, that could also trigger an order and you sell. You could do that, and it's uh, something that you've been able to do forever, right? Like there was this guy Nicholas Darvis. He traded, I believe, in the 50s, and long before the internet. Using the old-fashioned ticker tape, right? Like, and he would have to get on the phone and call his broker, not on a smartphone, obviously, but like one of those old-fashioned phones with the wire connected, and he would need to call his broker and tell him like, hey, place this order if it crosses above X, sell if it does Y, and he would plot his charts by hand, and he was able to make that work. We have the ability to do the same, right? So he was not trading full time either. He was a full time ballroom dancer and was able to make that work. We're able to make this work part time by doing it this way. He was doing the same kind of things, screening for fundamental criteria, uh, right? Like, did stocks make X, Y, and Z fundamental criteria? From that subset, what types of patterns is price making? Is this a leader? Looking at things like relative strength, right? Like that's what this line here is, right? So you can see here that this stock happened to be outperforming the market for over a year, right? So looking for those kinds of things, and so that just really narrows the focus, and you're able to participate. And it was that kind of stuff that started to work a lot better. Um, to take it one more step forward, right? Because I don't want you to have the The notion that I read a book, started doing all this stuff on my own, and then all of a sudden, the light bulb went off, and you're off to the races. No, like it took a lot of practice. It took getting other people around me, right? Like so, I was still kind of struggling after reading how to make money in stocks, and it wasn't until maybe about a year in that I finally discovered this meetup group. Uh, Investors Business Daily had meetup groups all across the U.S., and they had one in New York City, my hometown. And so I found that, and I went to a meeting. Was floored by the people that were there and the level of presentations. The thing was basically free. Like I forget how much. Back then, it might have been like $10 or $20 just to pay for the room. And all volunteers. Some people were further along than others, some full-time traders, some part-time traders, some people just like me that were kind of starting out with the system at the time. And it was in that kind of environment where you're able to bounce ideas off of other people, see what they're doing, learn some of the pitfalls. Like it was that really started to accelerate my growth. And within the course of a year, I went from boom and bust to finally starting to get some real consistency, showed the other people in my group what I was doing, how I was taking this stuff and applying it, and they wanted me to be a leader in the group because I basically took what they were doing and I made it fit my schedule. And that was something that was unique and able to be like valuable to other people that are trying to do the same thing. And it really came down to to what we were talking about before, with screening for a smaller number of things, and then saying that okay, I want to trade a smaller number of setups. Look at the time frames that I want to trade, and be able to execute just based on that, and not really have to worry about checking stuff in the middle of the day. Any questions on this stuff so far? We have a few more things to get through. All right. So, and we could always go back. But for right now, let me tell you about how my trading has evolved since quitting the day job, and it has evolved quite a bit since quitting the day job, and it not in the way that you might think. You might hear something like that and think that, oh yeah, like now, like I'm checking stuff intraday and I'm doing a lot of day trading, or like just piling on a lot of stuff. That no, not really. It hasn't evolved in that way. A lot like I'm still doing my same weekend routine. I'm still screening for stocks. What part of what's evolved is just being more like immersed in trading, talking to you guys, getting great questions, and so it's those types of things that makes me start to think about the different ways to trade, different perspectives. So some of the ways that my trading has evolved is what I'm tracking, right? So starting that, I had spreadsheets before, but it's evolved quite nicely. Looking at monthly, weekly, and daily trends. Now, let me know if you're able to see this stuff. Okay. Um, uh, Monthly, weekly, and daily trends across the major indexes. That's something that helped me get out of the market. Basically, uh, well, where's the daily chart? That might be nicer to look at. Yeah. So over here, right? So you could see that I'm using different market conditions, right? So green, yellow, and red. So I was in a green condition, ramped up to a green condition at the beginning of November, right? Like so, um, and the way that I use green, yellow, and red, it has more to do with position size than with whether I'm going to trade at all or not. But was ramped up to a yellow condition mid-October. Um, Started to get more into the green at the beginning, and then transitioned back to yellow in November 9th. Right. So Here is November 9th, right there on the S&P. If we look at when it switched over to red, November 17th. This is November 17th, and I've been in a red condition since. Now, I had no idea that the market was going to do that. That's just the S&P. If we take a look at some of the other ones, right? Like take a look at the Russell, right? Like since well, what do we say? November 17 started a red condition. This is November 17. Well, like I wasn't forecasting that, but it's uh taking everything as like one part of a bigger puzzle, right? And I was doing that too while I was trading part-time, but now that I just happen to have a little bit more time in my hands, I have this membership service. I have you guys here, and I'm able to answer questions, right? Like your questions are some of the most valuable learning things. So that too, that's why you want to get into a community as well, because you start to hear different questions. Uh, I get more from the questions, even more so than the answers, because it forces you to think and think through different problems and scenarios and start to hear different perspectives. So, um, yeah, well, like that's how I started to think about okay, like the different time frames, different trends, looking not just at distribution days, but also the number of stocks making new highs versus new lows, the actual trade setups, the stocks on my watch list. One of the best things uh, that's contributed to how I view the market, is the market healthy or not, is the trade ideas themselves, right? So if I see stocks that are setting up that are great looking setups, that have the technical criteria that I look for, that are very constructive, that are showing buying, right? Like net buying versus net selling, and there's lots of ways to look at that and discover that. But we'll talk about that in another live stream. But if these are constructive patterns, then that's telling me that, hey, it's time to start to test some positions, put some risk on. If things have been working, to start to ramp up. But if good ideas are getting smashed, then that's telling me that this is not the time to be ramping up. If looking at the current environment, right? So just to compare the current environment, and I'll make this a bit bigger to make sure that you guys really see it. So to compare the current environment, right, trade ideas for the week, there were only 7 compared to what it was back here, right? Back in October, 81. Right? So, well, when we finally started to come off the lows in the beginning of October, it was 35. That was halfway decent. Then 81 ideas, 66 ideas, 64. And yeah, like that's like the main ideas that are setting up it, and then starting to drill down further into them and seeing that, okay, well, which ones are solid, which ones have a lot of flaws, and why. There's no perfect setup, but which are these high quality or not, um, that's a big tell. And seeing like how many are of these ideas are working for the week is a big tell too, right? Like well, when you're looking at your list and it's just like, wow, 70% of the list is positive. You've got a pretty good shot at picking one out of the bag and having a winner. But when you get into an environment like this, we only have 7 ideas and they're all kind of crappy. You it's time to step away, right? Like one of the best things about trading, right, is that you don't have to trade all the time. You could just wait for the good ones to come out. Here's a question from Tony. How did you handle stops when you were working? Excellent question. Thank you, Tony. So the way that I would handle stops is very similar to the way that I handle stops right now. I set hard stops in the market at a certain price. And so, for example, let's let's look at a couple of trades here. Let me pull up Apple. Right. So is that the? Yeah, I'm still on the major indexes. I've got another uh, trading view over here where we could pull up Apple. Right. So I would have a hard stop if I were trading this. I like to place my stops below both price structure and below some kind of a key moving average, something that's been respected. I'll take into account where I'm at in a position. So how much of a gain do I have? And I'll take into account too, Tony. What's the intent of this trade? Is this trade intended to be long term? Was this intended to be a shorter term trade? And that intent isn't set while I'm in this. Like I've been in this trade now for since April, right? So this was intended to be a long-term trade, and that's why I'm still holding through this. But let's say that this was intended to be a short-term trade, and let's just say for a moment that I saw this cup with handle here. Let me draw it out for you. So let's say that I saw this cup with handle and I'm like, you know what? I like this setup. It's forming very nicely. It's rounding out. It's got a great volume signature down here. Let me buy this as it's emerging from this cup with handle. And let's say that I bought that breakout and I wanted this to be a momentum play, short term, and I would be looking to sell into strength as we go over here. And if I'm holding anything, I'm placing my stop and I'm raising my stop as it creates new structure. So when price came down here, right, if you see that, and then rallied, what it did was it confirmed that this low was meaningful because what happened? Price came down here, it found a bid, and it started to rally. So that means that that low should hold or structure would be violated. So at this point, I would have my stop just below that. And it gives me a couple of things too, right? It also gives me not just that structural low, but what else does it give me? Gives me that purple line there, right? That purple line is the 21-day exponential moving average. And you can see how today price ran down, kissed it, and then bounced off of it, at least so far, right? It's about 2:30 p.m. We've got about an hour and a half left of trading. But so far, it's held. Now, if price continues to rally, and let's say we make a new high, then that means that I could move my stop up here if if I was playing shorter term. And that would be the new level of structure. Would I do that? Mm, maybe, maybe. I also, when I'm looking at where am I going to place my stop, I like to see not just where it's at on the time frame that I'm trading, but also how does it look on other time frames too. So I would zoom out to a weekly time frame, right? I would start to see, oh, well, that first stop was last week's low. This other stop would be this week's low. Okay, kind of makes sense to be there. I might split the stops, right? Now we're starting to get a little bit tactical. And it's those kind of tactical things, Tony, that started to occur to me a lot more as I transitioned into full time, just because I was able to put a little bit more focus into it, right? It's not that I needed to do all these kind of things. It was working before, but as I'm, like as you put a little bit more time into uh, personal development, personal growth, and uh, by that I mean into the trading parts too. Certain things start to occur to you a little bit more. And those are some of the things that occurred to me. And my growth, by the way, it's by no means done. I look forward to looking back a year from now, 5 years from now, 10 years from now, and seeing like how much growth has there been. I don't think that there is a ceiling to how good you could be at this game. So I'm looking forward to all of it. Great question. All right. So, let's take a look at some of the trading results for 2021 so far as of today. So let's put this back over here and we'll take a look at this spreadsheet again. So all the trades, I log all my trades, and this is something that I recommend to you guys too. Like right now, I'm in cash. I've been in cash since November 23rd. That's my swing trading account and a couple of long-term ideas down here that I've been holding for a while. Uh, Everything gets logged. Uh, these are all my trades for the year. And I'll share rationale, what I'm doing and why. I like to keep all that stuff so that way when later on when I'm doing a post analysis, it makes it so much easier to go back and like when I pop open like say this chart here, AM not WSC, right? And I look at this and I'm like, well, why did I sell there, right? It makes it so much easier to be able to see what I was thinking and why, and those kind of past results, and then compare it to, well, what is the stock doing right now, right? Let's see what WSC is doing now. So that's a weekly chart. Oops. No, that's the thing with TradingView. Every time that I have that paintbrush on, like it stays and I forget. Anyway, love TradingView. Yeah, so I ended up selling my last bit up here. Price is still around there. Maybe it forms another base. But given the market environment, uh, exited, and we'll see what happens from there. But I have my rationale, I have my thought process for the reasons why I sold it, and that's part of it too. That's going to be a very important part of your growth. Everybody that's here, everybody that's watching, if you're watching the replay later on, uh, having a trading log and not just saying that, oh, here's the trade and where I entered, where I exited, and the that part, but writing out your full rationale, marking up your charts, grading your trades, right? Like all that stuff is going to help you improve exponentially and dramatically faster than you otherwise would have. Um, so as far as results go, let me see where's the got a light over here. That's why I'm like looking around the light. Yeah, here's the results so far on the year. So total R on the year 67.19. So that's I've made 67 times what I've risked. My longest winning streak has been 5 trades in a row. My longest losing streak has been 9 trades in a row. So and this too, right? Like this is part of why it's so important to track your stats, so that way you know like, well, what's normal versus abnormal. Like you could have some people get 3, 4 losses in a row and they start beating themselves up. That might just be normal given your trading system. Uh, my batting average over here, right? My batting average is 44.5%. You might look at that and say, like, gosh, man, you suck. But you know what? Like trading is very much like baseball. Like if you're batting 300, like you could get into the Hall of Fame with that. And to be making like 67% like that, that's freaking insane. Like that, like I shouldn't say that it's insane, but that's a pretty good year. Not quite as good as 2020, right? Like 2020 triple digit year, but this is still a solid year. Tracking your other stats too, right? Like your average holding time. My average holding time on a winning trade is about a month. My average holding time for a loser is about a week. So if I'm holding a losing trade and it's been about a week, like that starts to give me a little bit of insight if this trade is likely to turn into a winner or not. And then to be able to go back through those close trades and see, well, what are some of the outliers, right? Because I don't want to just toss a trade because it's been at a loss for a little while. That that kind of stuff's important too. In fact, let me see if I can remember the trade. Um, Might have been Dava. Let me pull up Dava. It's either Dava or DFIN. Uh, yeah, I think it might have been uh, DFIN that was a slower starter. No, well, it took a while for it to really ramp up and get going, right? So it broke out. This is Donnelly Financial. It broke out of a classic VCP, did it on halfway decent volume, and it broke out, and then it just kind of went nowhere for a while, right? So between October 15th and October 29th, so I had to sit with this thing for about 2 weeks while it wasn't that it wasn't behaving well. It's just that it wasn't making a lot of progress. So I started to question, like, should I cut it? Should I not? But following the rules, right? Like, having a set of rules that you'll follow, and another important thing with rules too, you want to come up with your trading rules. You want to adhere to your trading rules, well, whatever the trading rules are. And part of your rules, whatever you come up with, should be some kind of a regular review process of those rules. So that way it gives you a feedback loop where you could evolve and grow. Um, if you develop a habit of adhering to your rules, that's the most important thing. Right? Like, no matter what your rules are, adhering to them is the most important thing. Because if you come up with rules and you're like, you know what, screw it, I'm not going to follow this, and you start doing random things, then you're developing a new habit of doing whatever the hell happens in the moment. Like, you don't want to fall into that trap. Adhere to your rules, develop that habit, and then later on, maybe one of your rules is to trust what you're feeling in a moment, right? Like, maybe that's a rule, but you need to develop that over time. Um, so that was the trading results for 2021. Looks like we have a couple of comments. Ah, here we go. Market Tech Talk, my buddy. Thanks so much for, well done. Knowing your trading data is critical. Yes, absolutely. Um, is a time to Is a time stop part of your rules? If so, what? Excellent question. Thank you for that. So, I think this is an excellent example. So a time stop. So not a time stop per se, not where it's like, oh, if the trade doesn't move in X amount of time, then see you later. But in a way, a moving average, and I like to use moving averages as one of the sell signals for myself. So in a way, the moving average behaves as a time-bound stop, because as like over here on DFIN, when price is progressing, and let me take off some of that stuff, it makes it look a little bit cleaner. As price is progressing, right, and it's kind of moving nowhere, these other moving averages, right, like that 21 day, it's catching up, right, and it's supporting and it's starting to move higher. And so if price started to lose that one, then I would have started to unroll the position a little bit more. And you might say, well, why the 21? Why not the 50? Why not the 5, the 10, or whatever moving average you come up with, right? Well, we could come up with any moving average we want. But the reason why for this one was because that was what it was finding support at back here, right? I like to use the moving average that price has found support at previously, and allow that to start to help guide the position. Now, as price progressed, right, and we started to get a little bit of acceleration over here, the moving average that it was getting support at changed, right? Like it wasn't just the 21 anymore, right? Like it still was kind of getting support around the 21 over here, and then it violated it right there. But over here, it started to get some support by the 5 EMA. Okay, great. When it started to break below the 5, then it changed that character. It started to change that character. And so that was the last bit that I sold. Uh, just a little bit below there, just below the 10, right? So selling into strength along the way was a one of the best things that helped my trading evolve, and it was something that I learned doing like when I was trading part time. Right? Like you can trade part time and sell into strength, and you could automate a lot of that stuff now too, right? So there's a platform that I really like called Thinkorswim. They allow you to set up orders where if price goes above X, you could sell, right? So what I'll do, and I'll still trade this way, where if price moves above X, it's an automatic sell. Automatic sell X amount of shares, right? So there's no thinking involved at that point. Like, yes, I do go back and I uh, update my plans, and I'm still following along with the trade. Like I don't just go to sleep on this stuff, but yeah, like you don't have to sit there and babysit a trade. Like, well, we could think about this stuff when it's convenient for us. Well, at the times that are best, when you're most alert, like that's the time to come up with these plans, not be dictated by any kind of anything else. Let's see. Well, what else? Um, so what time frame? 2 to 3 weeks with no relevant via the position. Yeah, kind of answered that. I like the moving averages plus the time Fibonacci extensions. Ooh, time Fibonacci extensions. I have not gotten into time Fibonacci extensions. But maybe, uh, yeah, but maybe we could talk about that one later on. Like, so one of the things that I love doing too. I'm not sure if you caught this part earlier, but I love learning from people. And one of the things that I find so fascinating about the market, and one of the reasons why I love this game, is that there's no end to how we can learn, how we can grow, how we can evolve. And yeah, like I use Fibonacci extensions, like the regular Fibonacci extensions, sometimes to help find price confluence, right? Like so, you see that I drew it up here, right? From this consolidation. And yeah, sure enough, price topped out right at the fib 2618, very close to it. So yeah, I'll use it for that, but I haven't used it for time. That's interesting. Yeah, well, we should talk uh for sure about that. Let's see. Well, what else? I've got another question in here from Edward. Could you tell how you use the color in TradingView like a traffic light? Yes, absolutely. So it's uh, not as much in TradingView, but it's more of my own way of seeing the market, right? So let me come back over here to the spreadsheet. Let me come over to the market mood log, and I have the conditions up here for green, yellow, and red. Let me know if you're able to see it, but I'll read them and I'll explain them. So for a green condition, I want at least 60% of my open trades to be positive, right? So if I'm at one point, like when I first started to test the waters and the market looked really good in the early part of October. At one point, like over the weekend, I had 5 open positions, right? So let's come back over here, right? So back here, right? Well, was it there? Let's find out. Uh, No, it was this weekend here. So I started to get long that week. And then over the weekend, right? So into that weekend, what is that? That's October 8th. I had 5 open positions. 4 of them were sitting at a loss, right? So yeah, but the positions themselves were still showing support, which is why I was comfortable holding them over the weekend, even though like you know 4 out of 5 were showing losses at the time. Um, but here's another thing with the whole green, yellow, red. So if I'm sitting with majority losses, right? So if we come over here and it's like, well, 49% or less open trades, that's a red condition. So part of what that's telling me, Edward, is that if I'm going to take any other positions, like I should not be scaling up my size yet because my initial trade ideas that they haven't panned out too well. Like I want to be making progress before I start really stepping on the gas, if that makes sense. Another part of it, right? So open trades, well, what's in your portfolio? That matters. Um, Trade ideas are positive. So those are the trades on my watch list. So there's the trades that I'm holding and also the trades that are on my watch list. Trades on your watch list matter quite a bit. So if you're finding, well, whatever setups you look at and the market is uh, favorable towards them, right? Like they're breaking out, they're running. You're not going to trade all of them, but you'll trade some of them. And if they're working, then that's the market telling you that hey, this is a good environment for the types of stuff that you trade. Let's get going. Great. So then what else? What else? Um, 5 or greater of the last 10 trades are positive. So it's starting to look at the historical batting average too, right? So are you closing most of your trades as winners? Are they more, are you on a losing streak, right? So it has to do both with market conditions, and I think that there's a bit of psychology in there too, at least for me. Like, yes, I'm aware of potential losing streaks in my system. Earlier, we looked at it and we saw that at one point this year, I had 9 losers in a row. That's more on the well, that is the extreme side of, for my system, but that happens. And even after trading for so many years, you could start to question yourself a little bit. And part of the way that I help to deal with that psychology is with this green, yellow, and red. So in that, if I've had a string of losses, I want to be trading smaller, right? So that way I could start to build up my confidence, start to get a couple of wins, and then start to add more risk. Um, the level of A level setups, right? Like how many A level setups, B level setups, C level setups. Well, what are the quality of the setups that you're seeing? You might see some setups and maybe that they look like trash, right? Like that. That's jumping ahead a little bit, but the setups that I've found this week, that they're all trash. Right? Like shouldn't say that. There were maybe 1 or 2 like halfway decent looking ones, but you really want more quality than that. And then, looking at the major indexes and the number of stocks making new highs versus new lows, I see all this stuff as a tapestry. And I see it as one big puzzle, right? Like there's no one thing that I would say is the like, oh, like this is the key. No, it's the whole thing, right? Like, well, no, we never want to get too caught up in the minutia of any one thing. Like, all of it matters, and it's seeing like how this stuff all kind of fits together. Really, really, one of the beauties of doing it this way is that you get to do it on your own time. Right? Like you could set up a spreadsheet similar to this. You could maybe you have a spreadsheet that's a lot simpler than this. But well, when you're doing your own work and you're just letting the market do the talking, you get to do it on your time. You could do this pre-market, post-market, weekends, whenever. That's really one of the great benefits of it. Tony, I really like TradingView and MarketSmith. Do you use other tools? If so, what? Let's see. Well, what else do I use aside from uh, those are the main ones that I use. MarketSmith and TradingView. Um, don't really use a whole lot else. There's stockcharts.com. Our other coach, Coach Stu, he's amazing, by the way. If you haven't had the chance to hear him speak, we did I believe we did 2 live streams together back on the channel, so definitely go check that out. Guy's a fountain of information, wealth of knowledge. Um, he likes to use stockcharts.com, and there's this relative rotation graph where you can see the sectors and how they're moving and going around in this circle of improving and declining. It's fascinating to look at. That's very useful too, and he shares that in our Discord channel all the time. So that's another thing. Yeah, that's pretty much it. Not overly complicated. Yeah, real quick. Trades on the radar, or what I like to call the untrade. So I always like to do my homework no matter what the market conditions are. And right now, we'll come over here, look at the focus list, and you can see that there's only 3 trades on the focus list right now. O'Reilly actually broke out, but even this, like, you can see that I have it as a level 3 or a C level trade, and part of the reason why had to do with this, right? You see the volume there? That volume on as it's yeah, maybe you might argue that, oh, it was getting support around the 50-day moving average, but it's also in the lower half of its range. Volume is elevated. Well, when prices moving from left to right, generally what you want to see is price drying up. It was doing that very well up until that point. So yeah, it was a halfway decent setup, but I saw that as another flaw. Then, well, what else? And this is all coming into today, right? So these are setups that I found last night. EVA, another one. Um, yeah, the volume signature started to get messed up a little bit right there. And so you could see like how I start to get a little bit nitpicky with what I'm going to trade, especially in this kind of environment. Yeah, it was really the volume signatures that started to get messed up on each of these. RMBS, this is another one too that I started to like, but it's not quite there. Actually, today, this action the price action itself is starting to get a little bit more productive over here. I'd like a little bit more sideways action out of it if I could, but yeah, that when when you screen for and look at 300 different stocks and or close to 400 stocks, and you're only finding a tiny handful of setups, I'd rather just let it go, to be honest. I'd rather wait for there to be a few more, right? Like maybe let me at least get into the double digits, right? Let's at least have 10, maybe 20, and start to see a little bit of progress. And then say, yeah, you know what? Then let me start to put something on and start to test the waters. I don't need to be the first one at a party, right? Like you ever go to a party and you're the first one there, right? You better to get to a party when it started a little bit. You don't have to be the last one there, but fashionably late. That's what I call the untrade, and that's what I've been doing, sitting in cash. Market Tech Talk, great session, Mike. I have 2 Fibonacci tutorials on my channel. Let's catch up soon, Dennis. Yeah, great. Let's do it. Looking forward to that. Yeah, good. Dennis is fantastic. Uh, check out his stuff too. Market conditional order on Crocs. Yeah, Crocs. Yeah, I had Marty Chargin on a little while ago, the Crocs man. Yeah, Crocs has just been running for a really long time, and every time uh, I start to think that yeah, it's done. Like it finds support and it continues to move. So we'll see what happens here. Yeah. So this is a weekly chart, and it's pulling right back to that former high, that pivot from this cup here. Kind of looks like maybe this qualifies as a base on base. It's starting to dip a little bit into that section there. So yeah, I might call that a base on base pattern if it continues to break out and work. I do like these skyscraper volumes like over here and then again over here. So it's still showing that institutional demand. I like it. Edward, how you do your stock screening and organize them? Ooh, great question. All right, so back over to MarketSmith. So the stuff kind of starts in MarketSmith. So I'll do the screening. I'll run all the scans that you see over here. I've done a couple of other live streams, tutorials, all that kind of stuff, both on the YouTube channel, and there's a whole bunch of other stuff too that I do on the website. That's part of the members only stuff. But yeah, well, like I run these screens. I build these watch lists over here, right? So I'll uh, build the universe list, right? And again, the universe list and the vast majority of this process was still started, and I was doing this kind of stuff part time. Build the universe list. Then after I have the universe list, go through it, see what kind of stocks are setting up, right? So that builds this trade ideas list, and I'll come up with a trade ideas list every single week, and then from there, uh, see what do a little bit more work on the stocks that are setting up, and start to think through, well, is this an A level setup, B level setup, C level setup? Why? And I have a set criteria for why. And uh, once I have this, I'm exporting it to Excel. I'm putting it in these spreadsheets, right? So these are the trade ideas that I had to start the week. And then I have these two other lists down here, right? Or really three, four other lists. So, and in the neighborhood list, those are the stocks that are getting close, but they're not quite actionable yet. This is a list that I update every single day after the market closes. Um, so I'll have that list, and then I'll have a list of focused list stocks that are actionable, that are potentially buyable right now, and then I'll do a little bit more work uh, on on those stocks. If there's anything that I'm interested in buying, it goes onto the action list. This week, I've just been sitting in cash. That hasn't been anything that I've wanted to put money in. But kind of brings us to this last segment that I wanted to talk about. Why bother doing prep when the market sucks? Right? Like right now, it's a red environment. There's barely anything setting up. Why do prep when the market sucks? The reason why, yeah, it's like I look at it as going to the gym, right? So, how you are right now is not a result of what you ate for breakfast or what you did yesterday. Like the your physical condition right now is the result of what you've been doing for the past couple of months, right? Um, It's the same thing with most other habits. Where you are now is not the result of what you did just yesterday. Um, it's the result of what you've been doing over the past stretch of time. So the way that I see uh, doing the prep where when the market isn't good right now, like why continue to screen for stocks? Why continue to do the homework? Well, why not just go on vacation and relax? If you've been crushing it, like if you are uh, like if you already have a habit of doing the prep and all this and you just want a little bit of time off, then yeah, absolutely do it. But if you are trying to build a new habit, then you want to be doing the work regardless of the market condition, and it's more about building that muscle, right? I like to get into the habit of doing this daily prep, weekly prep, whatever and whenever you're going to do it, and to just showing up, build that habit of showing up, and then that becomes your default, where it becomes easier to do the work than not to do the work. And then when the market finally does turn, hey, you're ready. Well, like the market was not easy for a while, right? Like in September, right? Like so, let's come back over here. Right, well, where is it? Pull up the yeah. We let's look at the Nasdaq, right? So yeah, for most of September, right? You're in this downtrend, right? Like the market looked like it was going to puke there. But then what happens, right? Beginning of October, things start to turn around. If I had slacked off on the prep, I would have missed this, right? And this it was just that month and a half where like that was my best run of the year. And I would have missed it if I didn't keep up with the prep, right? It wasn't that I just needed to turn it on there, it was the continuous habit that allowed me to profit so well in that and to be able to get out of the market in time too when things started to turn south. That's why you always want to do your prep regardless of the market condition. So wow, we've been going strong for an hour. Are there any other questions? Any other questions at all? Yeah, by the way, too, if you haven't done so already, make sure that you hit the like and subscribe button. Uh, that helps out quite a bit. But yeah, let me know what other questions you guys have. And there's my Twitter, Instagram, stock twits, all that stuff. So you can follow on those platforms as well. But any other questions? Any other questions? All right. Well, that was one heck of a session. I hope that you guys enjoyed it as much as I did. I really did. And your questions were fabulous too. Keep your questions coming in. I appreciate them. If you're watching this later on, like as a replay, or if you're rewatching it, right? If there were some points that you liked and you're watching it again, add comments to this video. I go back and I read all the comments on all the different platforms, and it's yeah, it's a great way to keep in touch. I want to say thank you so much for joining me today. I truly, truly appreciate it. Let's see. One more comment. One more comment came in from Dennis before we wrap things up over here. All right. So because the best setups happen just after the market stops sucking, we must be ready. Plus, the market tends to move quickly once it turns around. Bottoming is more of an event. If you're not ready, you miss out. Absolutely, 100% true. Yeah, and definitely. Hey, if you guys aren't following Dennis, like that, Dennis is a fantastic follow. He was one of the people that were profiled in Amy Smith's book, "How to Make Money in Stock Success Stories." Right, so definitely give Dennis a like and a follow too. But again, everybody, I appreciate you guys being here, and I will see you next week. Take care. Much love. Peace out. Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Mara Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.